what do you think is still adequately and reasonably priced in Indian markets today?
Yeah, I think good morning, Shell. See, I think we've got two stock ideas which we believe have got a lot of value and firepower to actually get re-rated further. The first company is MGL, that is Mahanagar Gas. The company came out with very strong numbers. In fact, the interesting part about the quarter one numbers this time was that the operating EBITDA has almost doubled. EBITDA margins have moved up from almost 27, 28% to 34%. The key reason is natural gas prices have come down, and both the PNG as well as the CNG volume has been in almost mid to double digits. Our sense is, in the natural gas space, especially the CNG gas space, this is an extremely undervalued stock. Despite the fact that its fundamentals are very rock solid, our sense is that compared to last year's earnings of almost 78 rupees, this year we could see an earnings of almost 97 to 98 rupees. This is a debt-free business which generates an ROE and a return on capital employed of almost 24 to 25%. And I think the earnings growth over the next, say, 12 to 18 months looks well positioned. So here, Share, we are advising our clients to buy at the current level for a target price of at least 1400 over the next 12 to 15 months. And the other company is a small listed company in the oil and gas space. Again, it's called Deep Industries. Now this is India's largest outsourcing gas compression player. It's got a niche market in gas dehydration as well as integrated project management. And the numbers may look small, but on a top line of 340 crores last year, they made a EBITDA of 140 crores and a profit after tax of 125 crores. The first quarter numbers have also been very solid, 30 crores profit compared to 19 crores in Q1 of last year. A very strong order book of almost 1160 crores, no debt on the books. And obviously, they have now also announced last year the acquisition of Dolphin Offshore, which I think you must be remembering. It was a very old company with a very good asset base. The company is now going to be starting operations in
Yes.
the second half of FY24. So I think that also is going to be a key trigger. And lastly, without wasting time, the Dolphin Offshore is going to be listed again. So, you could see a lot of action on the stock once it gets listed again, and some value unlocking for Deep. So here also, I think you would look at a target price of 330, 335 over the next, say, 12 to 15 months.
Okay, let's go backwards. At 233, Deep Industries is already at a record high, and remember, this is after a recent split that the company had announced on the stock price. Despite it being a record high, the counter is at a PE of just 10, a market capitalization of somewhere like 1500 crores, and a revenue stream of 370 crores. So it's an extremely high margin business. On a revenue of 370 crores over the last 12 months, the company's posted an earnings of about 144 crores. It has a cash of 90 crores on the balance sheet and a minuscule debt of 31. So on a net debt basis, the company is on a positive ground, and of course at about 63%. That's the promoter ownership as far as Deep Industries is concerned. If you look at the peer comparison, Avinash very rightly mentions that it's compared with its peers, it's priced at a fairly substantially discount level. Very strong EBIT and net operating margins, return on equity at about 50% over the last 3 years. So these are very, very good numbers to look at. The only issue here is that the company, which is Deep Industries, is trading at a record high. So adequate caution needs to be taken into account if you stop or if you start a buy in this particular counter. And of course, Mahanagar Gas, an undervalued public sector asset which recently got listed about 5-7 years ago. Very, very strong earnings that have come out, and that's getting reflected in the stock. Avinash, coming back to Mahanagar, the all-time high for this counter is something like 1370 rupees, which got stuck in December of 2017. So far we've seen 1120. Would you estimate a 1 year horizon for the chart, and where do you think fundamentally the stock should be quoting at?
So I think, Shail, frankly, I look at the fundamentals and not the charts, but I think looking at the valuation multiple, the stock trades at a forward multiple of almost 11 times. And I think for a company like MGL, which has got a very large base in Maharashtra, both from the commercial segment as well as from the industrial segment. I would believe that CNG is now kind of a fuel which is increasingly catching up. And I think even companies like Mahanagar have been focusing more on the CNG kind of product mix for their vehicles. So clearly, you could see that multiples could expand to at least 13 to 14 times. And I think, a debt-free balance sheet, ROE of almost 20-25%, earnings growth of almost 20% plus, and a virtual monopoly in its business. Because as you realize that all these gas companies are localized, you have Indraprastha in Delhi, Gujarat Gas in Gujarat. So typically, I think the gas market is growing quite rapidly. The government is also encouraging clean energy. So to that extent, I think a price of 1400 is very much possible, and I think this is a very conservative target. We believe that a lot of institutions and a lot of HNIs, PMSs have already entered, but I think the stock will gradually get re-rated as numbers come in for the second and third quarter also.
If you like the video, do like, comment, share and subscribe.